Hey, welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul. Welcome to all of our viewers and our listeners out there for another week of Let's Talk Real Estate. I'm Barry Saywitz, president of the Saywitz Company and managing partner of Barry Saywitz Properties. And if it's one thing that I've learned in my 30 plus years of doing this, it's to look at both sides of the equation, try and come up with the best solutions for whatever problem you're trying to solve. And today we're going to try and delve into one of my favorite and one of our more common themes on the show lately, the apartment market here in Orange County. And so before we get going, I want to do a shout out to all those mask makers out there. They are back in business, kicking them out. We are back in mask mandate in Los Angeles. We have mask policy here at the studio. Let's hope it's very quick and then we get back to sort of normalcy. But on a lighter note, I want to welcome our guest, Jim Colombo, who is president and founder of POINTE Vista Management, a multifamily owner, operator, investor, and here in Newport Beach. And Jim, welcome to the show.
Thanks, Barry. Thanks for having me.
Yeah, so today's topic, we're going to talk a little apartments, we're going to talk a little multifamily. Your history in terms of in the real estate market and investing here in Orange County, you've been doing it for quite some time. And I guess for our viewers and listeners out there, I guess give them a little explanation as to how you got going with it.
You know, we started about 25 years ago in the mid-90s, and it really was just a side deal. My wife and I, primarily me, I think my wife was completely on board at the time. You know, it's like, we don't want to work anymore, you know, why on the weekends and so forth. So we both had corporate jobs, and but I was in an entrepreneurial family and grown up, so I think I always had that type of interest. And so in the mid-90s, I started looking at fourplexes. It took me about 2 years of research. This was before internet, and we bought our first one in Anaheim. And it was a deal where we assumed the loan. It was in a terrible neighborhood, but we learned a lot. And within the first 2 years, I'd say the first year and a half was a lot of work. As we were approaching our second year, I had bought 2 more, so we were at 12, and we had bought a total of 8 fourplexes within about, so early 96 to about 99.
And prices were a lot cheaper then.
They were a lot
financing
cheaper.
A little easier to get as well.
It was.
But the challenges of running a fourplex still the same today. I mean, nothing's really changed. You have the dynamic of people that are in a smaller property and in close quarters. And then I'm guessing you bought these properties in not the greatest neighborhood at the time. Maybe it's better today, but the plan was fix it up and make it nicer.
Oh yes, absolutely. I mean, that was the goal, to someday either sell that, trade that into a larger property. And at the time, it was a lot of sort of a retirement focus more than anything, how it started. Maybe have 1 or 2. But I got to where I really liked it, and I was interested, and I was fascinated with the aspects, and so we went full time. You know, so right around 99 and 2000, we started buying 12 units in larger complexes. We traded the smaller ones into the larger ones, and then we got investors and moved from there. And in the early 2000s, we bought larger stuff, 30, 40 units. And then to the 50 units and 70 unit type of properties.
Yeah, you're a success story for the guy who says, I want to get into real estate. I started with one, and then it became its own animal.
Yeah, it really did. It really became a life of its own, essentially.
Yeah. And so then it went from, hey, I've got this as a side job, to, hey, this is my job, and I'm ditching my other job.
Yes, it was. We both left corporate. My wife, you know, when I first talked to her about it, we'd gotten our third fourplex, and I love spreadsheets, and looking these numbers out, and I'm saying to my wife, we're on vacation one time, and I said, you know, we could work our way out of these corporate jobs in fairly short order if we really focus on this. And she's like, are you crazy? I'm not quitting my job, back then. But then she took a few weeks off, and I said, hey, can you go take a look at the property she was working on? She goes, I kind of like this. It's kind of fun. And she had, the freedom of time and so forth. It's not as glamorous. It was certainly not as glamorous as a corporate job and all the things that we did. But the freedom of your time and the gratification of what we did to the properties, improving the tenants' lives. I mean, yes, the cash flow and all of that is very important. But there was a lot of aspects that were very gratifying as well.
But you grew it to a portfolio of hundreds of units and dozens of properties, all really throughout Orange County.
Yes, it was all in Orange County. We ventured one time in the mid-2000s out into the Phoenix area, and I just found that I did a better job if it was closer.
Yeah.
We were just not at that size, so we came back and brought that back. And, that timing was good. That was just before the recession.
And then your plan, I guess, going forward, right? So is the plan then to buy more stuff? Is it to just maintain what you have, simplify your life, and reduce the drama, or all the above?
All the above, really. I mean, it's, I say, what do you think? Well, if I'm going to acquire something now, it's going to be something I really want.
Yeah.
And it's not that we have to. It's going to have to be satisfying. We did, in late 18, I made a decision to basically convert our entire portfolio. And we went and converted everything we owned has been traded since between late 18 and now.
And so when you did that, did you roll into bigger, better, more concentrated, all the above again?
The total number of units is less, but I went for quality.
Yeah.
I was chasing yield for many years, and I realized that, that's stressful and that's good for a while. Unless you want to get to a scale, I didn't have family that kind of add on to that. And so for us, the choice seemed to, just from a stress standpoint and in a gratifying situation.
And so in today's world, you manage them yourselves.
Yes.
And the game plan going forward, is it to continue to upgrade the properties as life goes on, make it better, nicer for the tenants, capitalize on the rents wherever you can?
Yes, and that's the balancing act, and that's the part that I find intriguing, is to be able to do all of that, right? Improve your bottom line, but also improve the quality of the product, the quality of the residence, create a more of a tranquil setting, you might say, something where it takes less work. You can push rents, you can push things, but sometimes you might have more turnover.
Yeah.
But you don't want to go to the other extreme where saying, oh, I've had friends in the business, I keep my rents really low, but it's like, how much have you given up in that time,
Yeah.
And then you've got, at some point, you have to replace a roof, or you have to do other large capital expenses. So you have to be cognizant of those capital expenses, for sure, and when you're doing that. So, it's kind of coming at that place that's a happy medium, I found.
And so then let's fast forward. I don't want to dwell on COVID and eviction moratoriums and people not paying and all that negative energy stuff, because it just depressed me and it's early in the morning. But let's fast forward to today. So in today's world, the real estate market is certainly changing with the winds of change of interest rates going up and the economy in general. But the apartment market, at least for the moment, the vacancy is in an all-time low. Rents still continuing to rise. The properties within your portfolio are really more garden style, small to medium sized properties, not too dissimilar to the stuff that we own. So the concept, I guess the question I have for you is, do you continue to raise the rents, and do you find that your rents in many instances are still below market? The market keeps going up.
Currently, yes, that's been the case. It seems like that we've not really been able to catch up to the market. And what we're seeing is we're really seeing a different type of resident. Maybe this resident, especially right now with interest rates going up, they might be a young couple or a young family, or some. We've had a lot of people that are retired that as well as residents, but home ownership is out of reach for them for one reason or another.
Yeah, or just not
or
something
they don't have a
do.
desire. There's
Yeah.
a lot of young couples I'm finding today. It was different from when I was younger. They don't seem to have the desire. They want to stay mobile. Maybe they're not going to live in this location forever. So there's a lot of benefit to renting, and it's to capture those types of residents where they recognize nicer finishes, nicer amenities.
Well, that was
and
that was
so
my next
forth.
question. Is so when a unit becomes available, do you fix it up nice?
Yes.
And then with these smaller garden style properties, they do have amenities, a lot of them with outdoor either patios or yard areas or common courtyards, which especially with COVID and especially with people working from home seem to be really a lot more important.
It is. And people well, even during COVID, we saw a big change. There were a lot of people that traditionally had a one bedroom that wanted a two bedroom. So we had people that were in one bedrooms that moved it. We had a two bedroom come available. They were a good resident. Great, let's move them, and then we could fix up the one bedroom they were in at the same time. And sometimes you get 2 for 1. And people like amenities. As far as I have found, the pool's nice. People think they want to use it. They use it somewhat, but you mentioned, outdoor barbecue and outdoor spaces seem to be something that they really like.
Yeah,
And we've found that. Parking's important, of course, and I've always told other friends in the business, I says, they're looking at something, and I say, well, the parking ratio is pretty low. That's going to be a challenge, and so those are things to think about. But yes, there's always, even the last year and a half to 2 years, every vacancy has been an opportunity to improve that, and we have steadily improved those finishes.
Costs more now.
It costs more. I mean, countertops are twice what they were. For the same quality, is at least twice as much as they were 2 years ago.
Yeah, well, I would say
just as an example.
You go down the line, right? Appliances,
Everything.
30 to 50% more wood, chlorine, everything, right?
Yeah, so you need to capture that at some level, So you need to, and that's why. But those finishes, they do bring you a tenant that is going to appreciate it, and
is willing to pay for it.
Is willing to pay for it. Exactly.
And their preconceived notion is a lot different than an existing tenant, right? An existing tenant says, hey, you're raising my rent. You didn't do anything. I've lived here forever. You should make me a deal. There's nothing wrong with that logic. But a new tenant that's off the streets that's been shopping around goes,
Yes.
This thing's pretty nice, right?
Exactly. And so I try to work that into the budget a little bit too, as we are increasing rents, that some of these tenants have been a long time. Maybe they've got older, they've got carpet, and now we're using vinyl plank floorings.
Right.
So a lot of times we'll upgrade them. So you've been here a long time, you've been a good tenant. Their rent is not as high as a new tenant. Their neighbor might have moved in, but it's gone up some. So we try to create a balance there, give them a new flooring, things that we want them to feel, welcome and happy with their home. I mean, there's always that. You want to create an environment, I think, that the residents are happy to live there.
It's a long-term investment.
It's a long-term, exactly. So, I mean, every day your unit is vacant, that's money lost. And you can say, so a lot of people don't take that into consideration. I'm going to spend $6-8 grand more now to upgrade this unit. If it's vacant for a month, you've lost $2,500, $3,000. So that's an additional cost. But if you can get it done, keep the tenant in there. Time is money.
No question. And so what are you hearing from your people that are your on-site managers and your leasing folks? Is the activity out there still really high demand in terms of call volume? And
Very high.
Yeah.
Very high. The volume is, we rented in Costa Mesa about 2 weeks ago. We had a unit come up. The gal was moving out of town, and in one day we had over 100 what we call guest cards that come in.
Yeah, I mean, it's
in a day. So that's become, and it was kind of interesting. And one gentleman, before he had the showing scheduled, he actually applied, and it was a very good credit, no problem at all. So I said, well, he was the first one, it was good credit, and he never got back to us. So we sent another note, hey, I didn't hear from you. Can you get by 5 o'clock? Didn't hear back from him. So we rented it, and finally, the next day, he gets to us and he says, oh, I'm sorry, I was kind of thinking about it. So, well, it is rented. He goes, well, what about the other one I've sent? It was coming. That got rented too.
Right.
So,
I mean, if you're a tenant out there, I mean, there's a lesson learned. I would tell you, we had a studio in Costa Mesa. We literally had over 100 calls as well in a 2-day period. Mm-hmm. And then if you're a tenant out there that has shaky credit or a pet, or you need to move a month or two from now, I went and looked at someone else's apartment just for the sake of seeing what someone else did. And I said, when are you looking to have somebody move in? And they said, tomorrow. And I said, but if I needed to give 30 days notice, hypothetically, would you wait? And they said, no. I just have too many other people that are willing to take it. And if you need to pay double rent, or you need to overlap, or if you want me to wait, I'm just not in a position to wait, because somebody else is going to come along and go, I'm here. And then it creates another dynamic, which is, do you include, so the unit's nice, but this one I looked at, they said, I said, what about a fridge? There's no fridge. They said, well, we don't include the fridge. Because as a landlord, you just cut back on things because the market's so tight, somebody will bring their own fridge.
Yeah, we started including fridges.
Yeah, we did too.
And we found that it's better in the long run. They're not taking it upstairs, so forth. You control, shall I say, occupancy sometimes a little bit too.
Well, so if you're putting in nice other appliances, you can match it.
You can match it. Right? So it just comes, and it also provides a method. If that resident gives notice, you can show the unit. I mean, one of the things that we try to do, if the tenant is, maybe they're in a lease and they're coming up on their lease and they need to leave early, job change as well, you can have the place, have it spotless and allow the on-site manager to show it. We can probably get you rented and get you out of your lease early.
Yeah.
So it's there's a lot of benefits, and I think it's better to have the fridges. I resisted it for a number of years. I said, Jesus, one more. It's one more appliance.
But now we just do it.
We just do it.
And so, what about lease terms? Like, are you the guy who does month to months? Do you do annual leases? Is it a combination? How does that go?
We do is when we bring on a new resident, it's a year lease, and then it goes to month. We have at times, kind of depends on the market a little bit, and we look at it and say, well, is there benefit to offering a lease renewal? The market right now has been so advantageous to having month-to-month residents because it's so easy to find tenants right now, and quality tenants.
Right. I mean, it's a double-edged sword because if the market changes, you don't want them leaving.
Right.
So today you might be happy.
Yeah. Now that could change next year. That could change. Whether everyone's talking about a looming recession, things could change possibly.
So let's shift gears for a second to the investor side of things. I mean, you have some investors that have gone in with you on projects and properties and stuff. What are they saying to you in today's world about wanting to continue to invest? Are they like, hey, Jim, go out and find us a deal. We think the market's changing. Is it we have cash, we want to invest it in real estate instead of the stock market? Or is it, hey, I'm just going to sit on the sidelines for a little bit and see how this thing plays itself out?
The vast majority are ready to put in more.
Really?
They are. They even, with the stock market, it has its fluctuations. We really try to build, and we do. We've been successful at creating an investment vehicle that it has stable monthly income to them.
Yeah.
So, and with very, little fluctuation, so that they can depend on it.
And do you find that they are more driven by the yield and the return, like I need a 6, 7, 8% return on my money? Or in today's world, is it, hey, it's, as you mentioned, it's stable, I know it's not going down, it's not going to do what the stock market did, it's not going down 30%, hopefully, right? Knock on wood.
Yeah, in the early days it was probably more focused on yield, but as we've moved and increased values, a lot of times what we do is we take on a new project and we get our funding, all of our investors pool in the money, we go acquire the property. We also, make provisions for capital expense, things like this. So we make those capital expenses. We get the rents up. We've turned, and now the property has been turned. It's essentially a higher performing product. Many times we've gone back out and refinanced it. Of course, today that's a little different with the rates,
right.
And we usually have been able to return on average about half that investment back to them within the first 3 to 4 years.
Yeah, because you're going in, you're fixing up, you're making
right.
it better, and the market has helped your cause.
And then we've actually improved in that way, and we're not affecting our cash flow.
Yeah,
I mean that's the thing. So now their yield is even much better, essentially. So
and they give you the money back and go do it again.
And they all say, well, where can we go put it in something else?
Right,
and that's usually that's usually their question.
So what advice would you have for the smaller mom and pop type of investor who's just getting started, who wants to do basically what you did, which is either get in the market and get in the game and buy a fourplex, or I've got a fourplex and I want to trade to 8 units? Is now the time to do that?
Well, I think rents will continue to rise. There's such a shortage of housing, and in the short term, it's tough for people to buy. So that demand is going to stay high for rentals for quite a while. I mean, you can't just magically just create housing overnight. So even if today they decided we're going to add 500,000 housing units, that's going to take years and years.
Well, also the
Yeah.
housing that they're building is brand new state-of-the-art housing. So when it does come on the market, it's at top dollar.
It's a top dollar, and I'm finding a lot of people that because we focus on the garden style, and I think this is where a small investor that has a fourplex, can exploit some of the differences. A lot of people do not want to live in a mid-rise. They don't have to go up an elevator through a central hallway.
Yeah.
They lose, and of course balconies are going away. With the laws changing, there are not going to be any balconies. That's, the laws, I think. So people will want some outdoor space. I find that's
And a smaller property
Smaller properties
feels like a
provide-
home a
It
little
feels
more.
home to them. And it's, where the larger ones are less transitory. I mean, we noticed that we had mid-rises and the turnover was much higher. Much higher. And it was not for any reason that the tenant was a problem. It's just, it didn't suit their needs as their family grew. They didn't kind of put their roots into it.
Yeah.
And so I think from a small investor, I still think it is, and I think you have to be realistic about what your costs are.
Because in a fourplex or a 6-unit or even an 8-unit, really tough to get it to pencil today.
Yeah.
You're really not going to get much of any cash flow.
And I would recommend, even if you're, the price per door on a fourplex is so high, it's really tough to get anything. So if you're looking and you're getting in, I would suggest look at an 8-unit. Maybe you get a family member to invest with you. Do something, pool with other people. I think you're going to get a better return on 5 and above than you are on a single fourplex.
Well, the financing also, you can get a larger loan on 5 and above
larger loan
than 4. It's just a question of how much do you want to bite off.
And the finance is based on the earnings of the property, not on your individual credit.
Yeah.
So a lot of times that can be better too.
Yeah, no, I agree, and I think that we kick it around all the time in our office, which is in the short term, the supply-demand concept of economics will continue to hold while there is limited supply and high demand. If you got 100 calls on a unit, then number one, the market's hot, and number two, you weren't charging enough.
Yes.
Because, as somebody said to me, we will continue in an unemotional way, we'll continue to raise the rents until the call volume is at a reasonable number. And if the call volume drops, then we will not raise rents anymore and we'll flatten it out. But with 100 calls, you would have rented that in 2 days.
It rents in about 2 days.
Yeah. So when you hear stories like that, and then you sit on the other side and you say, hey, I'm a tenant, you've got to be realistic, because while many people believe that the housing market is going to flatten with interest rates going up, I believe all that does is continue to put pressure on apartment rates in an upward fashion, and put pressure on people that are continuing to look to rent, which makes somebody who has an apartment to rent like yourself in a good position.
Yes, and I mean, and when you're marketing an apartment on a small investor, have the finishes correct. It's you want to get that best tenant. The tenant's going to appreciate those things. They're going to be a much better tenant for you. And I see sometimes smaller landlords, and we scour the ads constantly. On Zillow, every day I get feeds for all the cities we're in, and we look at those things, look at that competition, and there's a lot of things you can do to not only improve that particular unit to get a higher rent, but also I think people should stay cognizant of what type of resident. They want a resident that's going to take care of it and appreciate it.
Yeah, well, as a
and they're going to
landlord,
look out for it.
Yeah, and you don't want a problem tenant.
Right,
either.
and when you have a small property, 4 and 8 units, you're relying on their eyes and ears to look at that property. You don't have an on-site manager there.
Right.
And I always tell people, always have every property, even when we had a fourplex, we always had somebody that was assigned that got a slight discount or something, that we had eyes and ears.
Yeah.
And
I agree.
It pays dividends, and I know a lot don't do it, but it keeps from overcrowding.
Well, they keep the property clean, and then they tell you what's going on. So what advice would you have to a tenant out there who's getting ready to look around and look for a place? If you said, hey, I'm looking for a bigger, different, alternative place, what do you do to get yourself ready and get prepared to go rent a place?
First of all, get your credit up. Second thing is, make sure when you complete an application that it's complete. We see many applications that are just not complete.
Yeah.
And you'll just end up moving by the side. The person who's reviewing that will just go to the next one. Pets are tough, especially a large dog. A lot of places physically can't accommodate them. So, we love our pets, and I understand. But sometimes you can't have 2 extremely large dogs and expect to be in a little place. It's just the management's going to look at that and go, well, how's it going to affect the rest of the residents as well too? So credit is super important. Get there on time, complete the application, and be first. We tell people, if you really want it and you saw this apartment today,
Don't
complete
mess around.
complete the application fully today.
Yeah, and we tell people too. Look, it's whatever your story is, tell it. So if you want to put together a cover letter that says, "This is what my family does. This is where we're at," or "It's me and my roommate, and here's the deal," it helps give whoever is reviewing the application a little more teeth, and it helps set you apart.
It does.
From other tenants out there. It's no different than I equate it to applying for college. You have to set yourself apart from the crowd.
It is. It's almost a little bit like a job interview,
Yeah.
essentially. And you don't get too wordy. Just get to the point. Say what happened. Show how you're recovering from it. Maybe there was an event, there was a divorce or something a few years. Just explain it, and if that record will be reflected in the credit report anyway.
And,
we'll see
and
that.
if you have money in the bank, show a bank statement. If you don't have money in the bank, explain why that's the case.
Or be willing to pay an additional deposit
Yeah.
is another helpful way. People, some cosigners can be good. We find that they're not particularly necessary, but sometimes, of course, students.
And it
it's
cuts
good.
both ways. I mean, from
Yeah.
a landlord's perspective, we used to say, hey, if you have shaky credit, we'll do a double deposit.
Mm-hmm.
And then I found in COVID, you could have had a quadruple deposit and it wouldn't have helped your cause.
No, it wouldn't
So that one, for us in today's world, doesn't really go very far. The cosigner, if they're out of state, doesn't do anything for you. And if the cosigner doesn't own a home, have a lot of equity, and
Right.
have a lot of income, then it also doesn't.
It
help your
doesn't
cause.
really.
Right. I'm
it
not going to
doesn't
go
have much
chase
value.
somebody else. Right.
Or
That's
you
not
could
what
chase
I
somebody
want.
that lives in Florida, their parent in Costa, that type of a thing. So.
No, I would say, I'm curious your input, but we tell people all the time, look, put together whatever information you can and tell the story. And if there's a blemish or a mark on there, try and clean it up before you go looking. And if it is on there, address it. Because we have tenants that come back and then we ask the question and then we never hear from them again.
Mm-hmm.
Or, they say, oh, by the way, I have 2 dogs. Well, why wasn't that on the application in the first place?
That we see that a lot.
And then we just say, forget it because you were hiding it.
And then we required, that was the other thing. So you must disclose the pets, and it's not like the pet is going to disqualify them, but
I just want to know.
We've seen that. We just want to know.
I don't want to rent it to you, and the next thing you know, you're breeding dogs in there, right?
Mm-hmm.
So
Exactly.
So I think though, if you're a tenant out there, you've got starting early doesn't really help you either, because the timing of needing to pull the trigger, like you said,
You have to pull the trigger, and you have to be willing to pay double rent if that's the case to get the unit.
or even I would just say, not that I want extra money, nor does Jim, but if a unit's renting for $2,000, another way to separate yourself from the crowd would be offer another $50 a month on the rent.
Sure.
That'll separate you, right?
Yes,
And that
it would separate,
Right.
And it helps you move up the list,
Yeah.
and all those things. And you have to be able to pull the trigger. When we set out, one of the things that we ask is, oh, congratulations, you've been approved. Are you prepared to post your deposit immediately?
Right.
So we send them a link. They can post that deposit immediately. Because otherwise, it is not uncommon for us to have 10, 12, 14 applications for one unit right now. That's probably the average is 10 to 12 per
It's crazy.
per unit right now.
And the other thing is, you got to know as a landlord that your tenant, your prospect, is shopping around too, because it's so tight. Why would they just put all their eggs in one basket?
Right. So they're probably putting multiple applications as well.
Right. So knowing that, I need you to come to the post and put up the money.
Right.
Yeah.
So that, and we just say, to be fair to all the other applicants, and we found that's very effective.
Yeah.
It's very effective. So.
In terms of where you see, we just got a couple minutes left, but in terms of where you see the market in terms of values for the properties, with rising interest rates, but yet with rising rental rates, do you see the values of the properties for apartments in Orange County stabilizing down or up, at least over the next 12 months?
In the next 12 months, I think they'll continue to rise. I don't think they'll continue to rise at the rate that they did, because there are barriers of higher interest rates and so forth. But I still think there's value, and there's a lot of value, in the rental side of it and the income side.
If you know what you're doing.
But you have to know what you're doing, and you have to do it. Don't be cheap with your materials, and just don't hire a proper
Real
tradesperson to do the work. It will pay dividends. You don't want somebody moving in and then the dishwasher doesn't work. I mean, these are simple things. Check the stuff.
Yeah.
Replace it if you need to replace it. Don't don't be penny wise and pound foolish.
And don't buy the stuff that's discontinued, because now we have plenty of stuff that we thought wasn't going to be discontinued that is now discontinued.
Flooring is, we look at it and we go back to flooring and say, when did this come out? How long do we have it? If we didn't, that's why we do. And another thing is, when you do we do flooring now. We got rid of carpeting because the second tenant's never really happy with it, and we do the entire unit, so we never have to match later on.
Right.
And sometimes those are just some of the advice that I would give. Is if you're going to do it completely, and
be smart about what
you're buying. What you're buying.
I think I'm hearing from you what we've heard from other guests on the show, which is, I think if you're buying property, especially in Southern California and in Orange County in particular, if you're holding it for the long term, it's going to be a good investment for you.
Well,
but I think from both Jim and I's perspective, don't cheap it out.
Yeah, and I think the one last thing I would give advice for people that invest in property. I know everybody, or so many people, look at this as just a passive. It's not really passive income. You have to put efforts into it, whether it's you or a property management company. Somebody needs to manage it. It just can't be send out a rent increase, get your rent, pay your mortgage. It's more complex than that.
And in today's environment, the days of sending a $25 rent increase, that doesn't cut it. Your costs are up well more than that.
You need to understand your costs. You need to really understand your costs.
Yeah. Well, I think it's good advice. I told you it'd go quickly. We could chat about it all day. It's one of my favorite subjects, but we are unfortunately out of time. But I appreciate all the input and the insight that you've given. I think it's real practical day-to-day stuff, not only for the smaller to mid-size investor, but also for tenants out there that are listening. Some good tips as well. So, Jim, thanks for being on the show. Much continued success to you and your family and your business. It sounds like you've done very well, and I wish you more and more success as the market goes on.
Well, thank you for having me.
Yeah.
Appreciate it.
So I'm Barry Saywitz, president of the Saywitz Company. For those of you tuning in, listening in, thanks again for being with us this morning. We will be back next week for more real estate. If it's Tuesday, it's Let's Talk Real Estate. I want to give a special shout out to Paul and Sophia and everybody at the team here at OC Talk Radio and everyone at UCI who's wearing their mask. Make sure you stick with the program for the time being. And we will see you back next week on more Let's Talk Real Estate. Thanks for tuning in.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California, Irvine's Beale Applied Innovation Center.